schedule, but I think we have some things we should definitely talk about today because it feels like just about every day is very similar and we get our subtle changes. But today, obviously, we have a big event that we should be prepared for. So what I'm going to do today is really quickly talk to you about what you should be doing in a volatile market. And that's where we are right now, a market reacting to some kind of news event. So we're going to quickly talk about that. It'll take 5 minutes. And then we're going to go through some of the areas in the market. We're going to talk about, if you were in the chat today, that beaten down list that I was talking about with strong companies that have been beaten down. Companies have had quarterly revenue growth and earnings growth, that type of thing. Not to necessarily enter today, although a lot of them are actually putting in reversal candles today, but stuff that's beaten down that might be good value. And we're not essentially like Buffett type value investors, but anytime you get one of these big drops, there's some good value potential. So we'll talk about that, and then we'll hit some of the areas in the market right now: software, energy, metals, all these different areas, and just quickly look at what we should be paying attention to. Let's see who's in there. Curzin, what's going on? I'm in the chat right now, so if you want to say hi, go ahead. Curzin, what's going on? Mike, Noah, we've got Mike in here. Anyone else here? We'll give you a little shout out here. But good turnout for considering that this was put on so quickly. And the recording will be available as soon as I can publish the recording. I'll go ahead and publish that in the chat as well. So let's talk about it. I'm just going to go through this list. This is kind of my go-to list. We did a webinar on this years ago. When something was happening in the market. And also with people that I mentor, I always talk about this. You have to pull this out 2 or 3 times a year because inevitably there's something that happens a few times a year. And of course, today it's the war in the Ukraine, all the Russia stuff that's going on, which has the market obviously very volatile right now. So number one, which is interesting because I felt like I used to always have to tell people this, but judging from the chat, what's happening today hasn't even phased you guys. So you guys are pretty sophisticated when it comes to this stuff, I think because of the pandemic, and you've already experienced a lot of volatility in the market, so it doesn't phase you as much. But stay calm and adapt your strategy. Trading is a decision-making game. Every decision we make means something, right? It's not that if you have your regular job or your 9 to 5, the decisions you make don't mean something. But in those types of jobs, not every single thing you do every minute really impacts you. But when you're trading, when you're making your money off your trades, everything you do impacts you. So stay calm. You don't want to make bad decisions. You can't control what's happening. You can only control yourself. So that's point number one. Point number two, especially relevant to smaller accounts, but really applies to any size account. And that is, do not overtrade. You should be making less trades, not more, as a swing trader during these periods, because you're going to get so many fake outs, so many intraday type movements. When we say volatility, we mean up and down. There's going to be a lot of up and down, unpredictable type of movements. So do not overtrade. We've obviously exited our positions now. We're in cash, we're watching, but we're not going to get caught up with every little thing that happens. Now, if you are swing trading and day trading, you have to be able to separate the two, because with swing trading, you have to be very calm, very patient, and you can't overtrade. If you're intraday trading right now, and I was intraday trading this morning, you're making probably way more trades than normal. I don't know, give me a little message here for you guys who are also day trading. I'd be interested in seeing that. But if you day trade and swing, you have to be able to compartmentalize it. Like with my day trading, I got to up the frequency. There's a lot of volatility in the market intraday, and I can take advantage of that. Whereas a swing trader, these are fake outs for you, and you don't want to get caught up in that. So remember, if you do both, you have to be able to separate the two. And there's this tendency to say, wow, there's this amazing move in this certain stock for a day trade, and then it may influence you to swinging it when you really shouldn't be swinging it. So you got to separate that stuff. Okay. Marco here says he's at his 9 to 5 right now with his earbuds on. That's awesome. Marco, hopefully no one catches you here. Mike also day trades. All right. And hopefully, Mike, I'm sure you're doing a good job of it, but being able to separate the two. All right. Point number 3 kind of relates to what we were talking about with separating day trading and swing trading. That is, know your time frames. Understand the difference between day and swing time frames. things that are very significant intraday can mean nothing to us as swing traders. In the chat, I posted the Q's reversal today. And, maybe this isn't that significant for us as swing traders. Obviously, as a day trader, this is huge, what you're seeing here. But we're going to focus on the dailies. And what is the daily telling us? And look at the Qs right now, while it's interesting, and maybe if it got up higher and then tomorrow we got continuation, then it would really start to mean something. Right now, we're not making any huge moves based on this candle. There might be, if you want to take a little shot, a little gamble here and there, low risk, that's totally fine. But we're talking about very aggressive type moves. Today, right now, what we're seeing means nothing, even though on an intraday time frame and as a day trader, this means a lot. So remember that. Know your time frames. As a swing trader, you're looking at the dailies, and you want to see essentially what's happening at the open and the close, and what that candle is telling you. Okay, point number 4: cash is a position. There's this tendency, if you turn on CNBC right now, it's super exciting. All the talk, all the raised voices, all the volatility we're seeing in the market makes you want to do a lot. But there's nothing wrong with just sitting back right now, being in cash, which essentially we are right now, and just waiting. And if you think about it, if the market is volatile or you're in a bad market and you're in cash and you're essentially break even, you're usually beating the market and you're beating most traders. The Qs to this point, year to date, are down 17%. And if the Qs are down 17%, most traders are down more than that. So if you've been in cash this whole time and you're just break even and it feels kind of boring, you're actually crushing what the market is doing. And if you've been doing what we've been doing, you're probably up somewhere between 3 and 7 or 8% this year, which is around where we are. And again, crushing the market. The Qs are down 17%. So nothing wrong with being in cash in this volatile market. Wait, study, get your lists ready, wait for the signals, know what the signals are going to be that you're looking for. And of course, we're going to be talking about that over the next few days and weeks. And then when you get that signal, then jump in. The other way to look at it as cash as a position is you can say to yourself, there's going to be a little gamble in the market right now, a little risk. We really don't know what's going to happen, right? Tomorrow, this thing could be over. They pull out and we're going to get a huge move, right? And you could position yourself for that. But that could not be the case. Maybe that's not the case. Some really bad news happens and the market crashes even more, right? So we really don't know what's going to happen. It's a gamble right now, but you could say, you know what? I want to be mostly in cash, but I want to take some shots. I see, CrowdStrike. I love this candle in CrowdStrike and I want to take a shot at it. You can take a little risk. We know how to manage risk, right? So we can take instead of going 1% or 1.5%, maybe we take a 0.5% shot. And you like this candle pattern, you take it, but you say to yourself, I'm going to be 80% in cash or 70% in cash. So think of that as one big position. And then maybe 20 or 30% you can put towards, taking some shots here and there and things you see. So you can treat cash like that. You don't have to be all in cash, but you could make a significant amount of your account. Think of that as one big block position. Okay, point number 5, narrow your focus list. You're looking for specific signals. And as you've noticed, a lot of the market is moving in unison, right? Or it's a split market and certain things in the market are doing one thing, certain things in the market are doing the other, but a lot of things are moving together. So there's no need to have a list of 200 stocks that you're really paying close attention to right now. Narrow that list down to maybe anywhere from, we'll just say 10 to 30 things that you're looking at. Obviously the indexes, some of the major industries, a few stocks from some of the major industries that you're watching, and we're going to talk about a few of those today. And that's it. Now you can have another list for, if trends start to develop coming out of this, that you're ready to watch these stocks. But in terms of stuff you're really focused on potentially putting on trades, keep that list pretty narrow. You don't need to overanalyze things. Okay, point number 5, in any volatile market, we've talked about this a lot, relative strength. Pay attention to stocks that are showing relative strength to the market. In wartime, it's a little different. So a lot of times what the reason when there's market volatility, the market's pulling back hard, we want to see those relative strength stocks because oftentimes when the market recovers, those things are going to do really well. Certain things are moving specifically because of the war or what's going on in Russia, Ukraine. Those might not necessarily do well when we come out of this. So it's a little different. I've written here, relative strength stocks. We should be paying attention to them still, but maybe we take that with a grain of salt here because, for example, defense stocks might do really well right now, but then when this is over, they might pull back. So keep that in mind when we're thinking of relative strength. In this case, just because something is showing relative strength does not mean necessarily that it's going to continue to show relative strength, but it's still good to make that list and keep an eye on what's working and what's not. Point number 6, key support and resistance levels are very important during times of volatility. It's amazing how deep pullbacks will come in right to major support levels, and big run-ups will stall right at major resistance levels. So know where these are in the indexes, in the industries you're watching, and in the stocks you're watching. Always have those. We're always doing this, but especially during this time, you really want to know how does price react to these support levels. So let's, if we're looking at SPY here, we can see here, we have, in terms of moving averages, we have nothing really important right here. The next major price action support is we have an open gap here around 400, and that's also round number support. And price action here around 395. So I would say those are the major support in terms of price. Also go to the weeklies here, and you can see there's nothing on the weekly on the horizon either. We've already broke through the 50, but we know above us, if we were to start to bounce, the 50-day moving average is right there. So pay attention to those major. We've made an open gap here, so obviously this level from yesterday is going to become important as well. So know where key support levels are. Alluded to this already. The opens and closes are very important, and those form our candle formations as well. So we're going to be paying attention to those. Point number 8, be selective, be patient, but when you get your signal, don't be ready to be aggressive if you get a really strong signal. I think most of you probably weren't caught too much today because we've been harping on being cautious right now. Don't be in too many longs. Maybe some of you might have been caught in a long here or there. Anytime you're caught in a big gap down related to a news event that might be an overreaction, we've talked about this many times before. There's also a post on gap down strategy that you can look up. I think I posted it in the chat, and I'll post it again in the chat today if you haven't seen it. But if you get caught with longs on a big gap down, I usually will not jump out right away. And it would have probably saved you a little bit today as well if you didn't jump out right away. Because what often happens is the morning open, there's a lot of fear, there's a lot of overreactions, and you get the big drop down. And then you'll get a little bit of a recovery. And then it's either a full recovery, and that's the extent of it, or it may then start the next move down. And we don't know what's going to happen now with this Russia thing, but at least it gets you able to get out at a better price. So now that can be a slippery slope. You have to decide, okay, this thing has gapped down to this level. My max pain is going to be a certain level, and stick to that. Don't let it turn into a slippery slope of a huge drawdown. But hold on for a little bit and see if it recovers. And some of these stocks, some stocks, if you were, caught, with a stock gapping down, let's just say you were in DOCU and you happen to be long for some reason, and it would have been down at 101. Now it's at 108. Maybe you could get out at a better price. So just remember that if you're caught in longs when some kind of event like this happens. Point number 10 here. I don't do this a lot in the report, even though I mention it, but you guys can do it on your own. That is trading VIX. And the reason I don't do it anymore is because when I have done it here, some people trade it very poorly and have been crushed by it. But anytime there is fear in the market, VIX is going to pop. So you take something like UVXY and, just look at the move here in UVXY. It has gone from 12 to 20. So an 80% move, while the market during this period is down, I don't know how much percent, maybe 6 or 7 or 8%, whatever the Qs have gone down or SPY has gone down during that period. VIX is up about 80% during that period. So you can see the kind of spikes you can get in VIX, and especially if you trade the leveraged something like UVXY, you can get some really outsized gains when there is fear in the market. And I would put on small positions. I've talked about this in the past, pair trading. If you feel like the market is going to be volatile, let me actually kind of show you an example here. You can also there are a lot of good option strategies to do this with, but you should really know what you're doing with options before you do something like that. But you could pit two stocks against each other that are similar in volatility. Like say you take Apple, or let's say you take NVIDIA, we'll just say this is NVIDIA, and you took AMD. Essentially, you could go long one, short the other, and it really doesn't matter which, if they're going to move, if you think they're going to move together. And in this case, you're not necessarily caring what direction the market goes, but you expect big volatility in either direction. So, like if the market went down, you would profit a lot from your AMD short, and you would get stopped out very quickly of your NVIDIA long in this situation, and you'd have a 50% break even, but you'd make a lot more on the successful trade. So that's if there is volatility. And a lot of times you'll get caught, maybe you get stopped out of both and take small losses, or get a little win and a little loss. But if there's really a significant move, you can come out ahead. So that's the way to do it without knowing options. Just do a pair trade like this. And then obviously there are some options volatility strategies that options volatility strategies where you can take advantage of volatility without picking direction in the market. So essentially you create an option strategy where if you think this is the range in the market, you'll lose if it stays in the range, but you win if it goes in either directions with spreads and that type of thing. And I've taught some options classes where we went over this stuff, but a little too complicated to go over here. But investigate that if you're interested in volatility or hedging type strategies with options. Okay, so pair trading, and that's about it. So that's essentially what we're doing here. A lot of it is be patient, make your list, get ready for the moves. And maybe we're getting a signal right here. It's always risky to jump in on the first day. Look what's already happening. A lot of people were getting excited early morning, and look, it's already fading. So we really don't know what's going to happen. No one can predict what's happening, and it's just gambling right now. Maybe you pick a direction, you end up being right, but you really didn't know it. It was just a gamble that you went on. So be patient right now. Wait for good signals. Don't be afraid to miss the first move. You're probably going to miss the first move. But then if it's truly a trend, there's going to be a secondary move in play. Or that move fails, and then you can jump in with shorts. So be patient now. If you catch the first move, that's fine. If you miss the first move, that's fine. The second move is going to come, and you can profit off that. But let's take a look now at some of the areas we're keying in on. One is defense. And it's actually been a little surprising that defense has not been stronger today. Down about up about 0.47%. But if we look through, like, say, XAR, which is a defense ETF, pretty mixed here. And some of the things you would think would be doing good, like, General Dynamics. Where's LMT? LMT should be in here. It's not. Let's see what LMT is doing today. Oh, LMT is actually break even right now, Lockheed. But we can see here, definitely pay attention to this ETF and then some of the stocks in here. So KTOS, look at that. Big move today, 11%. RKLB, which we actually profited from today. I got out very quickly because it's defense related. And we can see here that it's popped up to 9 today. And this actually looks like we could flip it and go long here today. This actually does look like a very strong reversal candle and a higher low. ACHR, another one that's very strong today. LMT, obviously, and GD was high on my list, but obviously not very strong today, pulling back 1.5%. So that's defense. A few stocks to pay attention to. Interesting here with energy that the ETF is actually down 1.7%, even though oil is up 3%. So oil seems to be the play over energy stocks. And if we pull up XLE, we can see mostly red in here. And we've been rooting for this, right? We want to see a pullback in here. I think energy is going to be in a multi-year trend now. And if we look at XLE, you can see here how much room there is to the upside here just recently. And if we pull this back to the weekly, you can see 2013, 2014, this thing was at 102 and we're still at 66. So there's still a lot of room to the upside in energy. I think we're at the start of a trend here, and we're going to look for good entries, essentially pullback entries. And maybe we're starting to get that now. So that was the stocks in XLE. The stocks that we're watching for energy are actually stronger. We got a lot of green in some of them that we're watching because we have focused heavily on some of the smaller energies and a lot of them in ENP. And ENP is actually green today, while integrated and some of the other ones are not quite as strong. So here's KOS, very strong today, actually putting in a good pullback kind of play, bouncing off a 50-day moving average. Pump's decent today. Apache or APA, sorry, holding the 50-day moving average. NEX about to rebound to 9. So there's some decent ones here as well that we should be paying attention to. Now let's go to software. This one really surprised me how strong software is today. You can see IGV is up 1.88%. Cybersecurity is very strong. So if we pull up Hack, you can see Hack is up 2%. And a lot of the stocks related to cybersecurity. Here's Cyber, up 6%. CrowdStrike, up 7%. PanW, up 7% as well. So software in general is really strong. And then within software, cybersecurity is even stronger. And let me just pull up some stocks here. Zoom was strong earlier, is not now since I started talking. Looks like, yeah, I started just pulling back, but it was very strong earlier. CrowdStrike, Zoom. Let's actually just pull up a software list here. And we can see here some of the strong ones. Net is very strong. This one's actually high on my the list that I was talking about. And I talked about the growth stocks with the revenues, strong revenues. If we look at Net here, this is a chart setup that I have that has earnings per shares and revenues in chart form. So you can see it here. You can see how strong one, institutional ownership has been increasing in this. Obviously, that's good. Look at the quarterly by quarterly revenue has been increasing. Here's the 1 year revenue change has also been increasing. So Net is one of my favorites right now in stocks that have been beaten down. You can see this thing was at 225. It's at 99 today. Now, I posted this list not to say we're going to enter right now. Maybe there's another leg down in the market, but at some point, I think this is going to be a good list to get kind of value stocks from. So Net, let me just go over some of these stocks with you guys. AR, WR is one. This is in biotech. This is getting crushed right now. This one has very strong revenue growth as well. You can see percent change revenue 1 year. Look how strong that has been. Had kind of a down quarter here, but overall has been very strong. ARWR, Riot. I was actually surprised this one, blockchain one, came on the list, but you can see how strong revenues have been for this, and institutional ownership has been increasing as well. GRWG related to pot stocks. You guys know this one has been on our list and how high it had been. Revenues are pretty good for this one as well. Twilio, we all know about this one. Look how strong, how much this one has been beaten down to 156 from almost 450. And you can see the percent change in revenues here as well. So once I've completed the list, I've got about half of it done right now. I'll post that for you guys in the chat, maybe tonight or tomorrow. And again, these aren't stocks necessarily to enter right now. Maybe we enter them a month or 2 months from now, depending on what the market does. But we should definitely be aware of those stocks. Essentially, what we're looking for is growth stocks that have been beaten down, because all growth stocks have, but they're actually good companies and maybe weren't as overvalued as some of the junk kind of growth that had been also going up. Okay, not home builders, solars, very strong today as well, up 4%. Here are the stocks that are in tan. Run is also on my growth quarterly by quarterly list. Let's see we can see it here. You can see the strength here in revenues. how much that has been increasing as well. So solar's very strong today. Here's run. Maybe this is one we could take a little shot at today. We'll see. But let me actually pull up my electric list because all the solars will be in that. You can see it's going to be solars and electric autos. Here's SEG, SPWR also strong. Beam strong today. Plug also strong today. So pay attention to these. And then home builders. I think Vizier had posted this one in the chat room. It's come back down a little bit, but I was actually surprised. I have no idea why home builders would be putting in reversal candles. It looks like they're starting to fade now. But here's Toll Brothers. Here's DHI, some of them that we watch, very strong. LGIH, also pretty strong. KBH here, also pretty strong. But again, these could fade by the end of the day. So I wouldn't get too caught up with what's going on right now. Let's see what happens as we get closer to the close. All right, so essentially the plan here is be cautious, make your lists, be ready for different things that can happen in the market. We didn't even talk about big tech here, but I'll talk about that when we get to the report. Let's see what big tech is doing right now. Kind of a mixed bag here. Be cautious, nothing wrong with taking no trades until we get a good signal. It's essentially a little bit of gambling right now because we don't know what the news events, nobody even knows if this thing is going to last a few days or a few months. I heard something on the news this morning that Russia has done something with their airspace going up to May. So maybe they're planning out to May, but who knows? This could last till May. This could last a few days. No one has any idea right now. So all of this is just gambling. The other thing I would think about is how this relates to inflation and the Fed. So obviously this is already having an impact on inflation. We're seeing what's happening with metals, with energy right now, with gas prices right now. And how does that impact the Fed? The Fed could go two ways. If this is increasing inflation, they could say, okay, we were talking about 50 basis points instead of 25, and now we have more reason to do it because we need to stop inflation. Or they could say this is wartime and we need to keep rates down. And I've heard both arguments this morning on what people think the Fed is going to do. And again, it's gambling. We don't know. You can guess, but we don't know. But just keep that in your mind too. One is, how does this impact the market? How long is this going to last? And two, how does this impact inflation and what the Fed does? All right, guys. So that's basically what I wanted to talk about today. We'll do, if there's anything that really, we're probably going to need to do a few more of these as things change in the market. You know, it's our normal steady kind of, not a lot changing day to day. So if needed, we'll do more of these. Mike, I will share my TC2000 screen setup. You need to email me email me with your TC2000 nickname, and then I'll send that to you through TC2000. You go to Tools, TC Mail, and I'll send that out to you. And let me know which layout you want. If you want the standard swing one like this, or do you want the one with the fundamentals on it? Okay, I got a few questions about that. Yeah, just email me, and here I'm going to put my email in the chat, and I'll get it to you. I'm pretty busy today, so I'll try to get it to you either by today or tomorrow. Okay, my email should be in the chat there. All right, guys. All right, good session. So yeah, be cautious. Don't overtrade. If you're going to take some positions, I would definitely small risk. There's nothing wrong with taking a trade or two here and there, but just make sure you're managing your risk well and don't overtrade. Okay, guys, I'll be back with the report a little later. And then if anything significant happens tomorrow, maybe we'll jump on and do this again tomorrow. All right, guys, talk soon.